Tom Cloud with this week's Precious Metals Market Update. Not a lot to report, but certainly all eyes are on the FOMC, the open market thing with Janet Yellen, the Federal Reserve, next month. In fact, the monitor, for people that monitor the interest rates, has been wrong about 90% of the time. It's claiming there's an 82% probability that the Fed will raise rates in March. So certainly the markets aren't acting like that because both stocks and gold would be slowed down in their recent appreciation. Everybody's talking about what the stock market's doing, but as I report this on Wednesday, 22nd of February, gold's up 7% for the year, and silver's up 12% for the year, and we just continue to see buying from the Far East in Asia just continuing to pick up, even though Americans still lag behind on realizing. Interesting, one of my clients called the other day, said, "Have you seen the U.S. debt clock?" And I said, "Yes, I'll look at it once a month or something. If you haven't looked at it, I would urge you to go to usdebtclock.org. And in the bottom right-hand corner, they have the real value of gold and silver based on the creation of paper money since 1971. And these numbers are way up. They're astronomical when you see $800 silver when silver's at $18. But that's what it really should be. That's what the real value of it is. And yet, when it does go to crazy numbers like 100 or even back to 50 where it was in 2011, I'm talking about silver, of course, then it's going to be very sudden. It's going to be very quickly, because the people that are playing both sides of it, shorting, pushing the market down to buy more, and then the ones going long, when they want the price to explode in the paper market, they'll bring it up in the physical market. And that's what we're looking at. So I continue to tell you, even with a little bit of risk of a increase in interest rates by the Federal Reserve in March, certainly we still feel it may have a minor effect on silver and gold and also the stock market if they do have a rate hike. But more importantly, we're also continuing to hear about what's going on with the Sharia law and the Muslims being able, under Sharia law, that live under Sharia law, to own metals. And, of course, they now can own them. And while I don't have any exact figures, I've seen numbers in the media that it's increased demand about 7%, because about 1/3 of the 6.5 billion people on the planet Earth live under Sharia law. So this is going to continue to be a factor as we move forward. But the remark of the week came from Alan Greenspan, former head of the Federal Reserve, when he said Ron Paul had it right all along on gold, and that you cannot have a paper currency, and basically it doesn't work. We just keep printing money. We're over $20 trillion in debt on a cash basis, and over $74 trillion in debt on promises like to pay me Social Security or you whatever you're getting, disability or whatever. We've got a $74 trillion obligation, and we're $20 trillion in debt, and the debt is still growing $1 trillion a year. It makes no difference. It's going to be the same under Trump as it was under Bush and it was under Obama, at least for a year or two. Trump may be able to get his plans through and cut the deficits in his year 3 or 4. We don't really know at this point. We're speculating. So we continue to say, watch out, continue to be diversified, continue to spread your wealth out, as Ecclesiastes 11:2 tells us, to spread your wealth 7 or 8 areas, because no man knows what disaster will come upon the land. That's a natural disaster or a financial disaster. It's still a disaster. So just keep, keep building your portfolio, in my opinion, to a higher percentage of gold and silver bullion. And right now the platinum and palladium are really in flux, because if the other thing I told you last week, and to remind those that weren't listening, March, the Netherlands election, in April is the French election. And if both of the people that think like Donald Trump win, Miss Penn in France, and I can't remember the guy's name in Netherlands, and they go to immigration, blocking immigration, similar to what you see in the U.S. as they talk about exiting the European Union. There'd be like a Brexit, and now you would have France and you would have Netherlands, and that would break up the whole EU, and that would put printing presses on the run. And I will tell you, without question, gold would be the preferred investment by central banks and major money managers in the world. So watch these elections very closely, and especially the exit from the EU if the conservative candidate in both the Netherlands and France win. If you need to talk to us, you can reach us at 800-247-2812. That's 800-247-2812. We can talk to you about a self-directed precious metals IRA where we can function as your representative and your broker. I would talk to each one of you about what you want in your portfolio, and we can help you choose your custodian if you'll just give us a call on that. And we continue to believe if you're still holding rare numismatic coins, we recommend you get into bullion coins as quickly as possible. So if you're holding rare coins, give us a call, because just look, since the year 2000, over the last 17 years, gold bullion's gone from 256 to 1240 where it is today. The rare coin index has not even doubled, while gold's gone up 500%. So you're still going to see another surge like that again. We recommend as quickly as you can to get out of rare coins and get into bullion gold and bullion silver. Until next week, this is Tom Cloud signing out.